Good afternoon, everyone. What's up, team? What's up, Rich? Cold smoke? Snowing up there by you, Brian? About to have another wave of snow come through here. Gotcha. Nice, yeah, starting tonight. Should be a really good weekend. I'm pumped. Looked like it was a sick powder day at the mountain on Tuesday, I think. Can't really remember. Yesterday? Yeah, it might have been yesterday. I didn't make it up, unfortunately. Okay, I've only had like one really good powder day so far this season, which is a little bit disappointing. Maybe 1.5. But hopefully it's not too late. It's not too late. Might get some nice March storms. What's up, Jim? What's up, Elliot? Bill, Vincent, Ryan, Sharir, Tom, Joanna. What's up, Bandit, Taff, David, L, Oriel, Vikas, good to see you. Aaron, Juan, Dave S in the house. Let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure should be the exact same. Traded a lot of Beyond again today. That was really good. I traded that AI this morning. That was really good. But I did not keep any AI. Yes, we've got Zscaler out. That's an interesting one. It looks like they beat completely across the board, but they are trading down for the moment. I think that some of those cybersecurity names have just had really, really big moves into the reports, and just might need a little cooling off a bit. But yeah, okay. So Zscaler is out. SOUN is out. Do we care about this? What's it doing? I'm curious. Trading down. This thing was nuts. What did you post? Yeah. Revenue is 17.1 million versus estimates of 17.9 million. Yeah, that is hilarious. Totally ridiculous. Dell was nice today? Oh yeah, Dell was nice today. Oh, that's after hours. Hear this move? Did we get those numbers posted in here? Oh yeah, Dimitri posted them. Adjusted EPS $2.20 versus consensus of $1.73. So that's pretty good. Q4 Rev is a little bit of a beat. Not seeing any guidance, but yeah, Dell trading pretty nice here after hours. We're waiting on this, this FSR, see what this thing can do. I think it's supposed to come out at 435. I have a position into it, but I'm not anticipating trading that one as active as I have been stuck with some of these other names, trading them super heavily after hours. But yeah, let's jump in. So first of all, I'd like to propose something to the New York Stock Exchange. I'd like to propose that going forward, leap years are holidays, and that the market closes. Happens once every 4 years. Let's just close the market for it. Let's just take that extra day off once every 4 years. That I would like to propose that. I must be getting old, because I remember for years and years and years I'd be so mad that the market closed on weekends, and now I've been doing this for so long. While I definitely love trading and I love markets, I'm like, we really could use some extra days. FSR not looking good. Cash equivalents miss estimates. Gotcha. All right, we'll keep an eye on it. I think, what did Pat say? They're pricing in a 30-cent move. Pricing in a 30-cent move on a 75-cent stock is pretty big. Moving up now. My offers are pretty far away. New deal partner model is gaining momentum and is expected to help improve brand awareness and sales throughout 2024. Expects his capital expenditures and working capital requirements to decrease during 2024 and beyond. That's good. So far, I'm not seeing any bankruptcy declarations, so I'm in the game. Thanks, Bill. tends to reduce its workforce by 15%. The market likes that for growth stocks still. In discussion with existing note holders about potentially making additional investment into the company. Streamlining operations, including its physical footprint and overall expenses. Current resources are insufficient to satisfy its requirements over the next 12 months. Ooh, don't like that headline. Can't like that headline. Anyway, now that I'm done proposing that the market closes on leap years going forward, we can do an afternoon meeting. Business plan is highly dependent on successful transition to its new dealer partner model in 2024. Streamlining operations includes reducing its physical footprint and overall expenses. I think I read that already. Sees non-GAAP operating expenses and capital expenditures for 2024 in a range of 320 to 390 million. I think it's current monetary resources. And additional equity or debt financing. I'm not seeing anything that's good really about this so far. It's like, yeah, you know, we're still a company for the moment, but we might not be a company a year from now. They haven't really traded it down though. It's like they want to squeeze this thing higher, but the buyers are like, yeah, I don't think I'm buying these headlines. Squeezing every growth stock out there, but these headlines I don't think are really what you want to see. Company expects to conclude there is substantial doubt about its ability to continue as a going concern. Oh man, I'm trying to decide if I want to hit out through 65 cents or so, which is where I think I bought that position. If it goes down there. I was able to sell a little bit at 75 cents like yesterday into the close, I think. Yeah, I just whacked out of a bunch. I'm not supposed to say that when I'm on YouTube. They might still squeeze it, but I'm happy to get out at my entry price on these not so great headlines and be glad that I sold a little bit for a 10-cent profit. Q4 revenue 200 million versus estimates of 273 million. Not seeing anything good in this. Loss per share $1.23. They had a chance. If they could have announced some sort of new partnership for this quarter in this report that enabled them to be a going concern, this thing could have doubled. So I'm plenty happy with the little gamble there that was taken. The Real, Brant's favorite company. Speaking of companies that are probably going to go bankrupt, Weight Watchers. You know, I feel like I should have caught this most recent down move. First of all, our friend Stefan told me that it's probably a zero when it was back in October when the thing was at $12. I didn't do anything with that information though because shorting stocks in this environment has been very hard with the way that they can squeeze things. WW, Weight Watchers. But then I also saw, you know, I don't follow celebrity news at all whatsoever. But I saw somewhere that Oprah is doing like Ozempic or whatever. And then I just didn't put two and two together. I knew that, you know, she was the poster person for Weight Watchers. And when she first joined Weight Watchers and joined the board, the stock had a huge squeeze and a huge boost on that. But it can't be a good thing if, you know, you're the face of Weight Watchers, Oprah Winfrey, is like, yeah, but you know what? I think I'm going to do Ozempic. Not great. And then we saw the headline in this earnings report that she's stepping down from the board. I think this company's shot. Yeah. Yeah, I think this company's shot. I don't think that they're going to be able to continue to be a going concern. But I get so nervous shorting these things. You know, do I really want to short a $3 stock? Do I really want to short a $3 stock here and like in this environment where they squeeze the hell out of like everything and next thing I know they just decide to rip this for $9 to 9 for no reason before it goes to 0. I don't know. I just don't know if I want to deal with that. Anyway, let's jump in. As of right now, in the market, I thought we traded down a little bit after hours. Let me look at my other chart. I thought that we down ticked. Is that not accurate? Yeah, we are down a little bit after hours. Maybe my level 1 is off. My level 1 here is saying we closed at 508.08. I don't think that's right. Maybe that was yesterday's close. But anyway, as of right now, including the downtick after hours, the S&P is up about 0.5%. The Qs are up about 0.9%. They have also downticked a little bit after hours, but then I think they recuperated. And the IWM here is up 0.6% and is also trading down about 20 cents after hours. So popping over to the daily charts, I mean, this is what we're looking for. We're looking for continuation of the trend right now. So we're looking for continuation of the trend. We've been talking about this the last couple days. The weekly chart, actually, I mentioned real quick when Pat was talking on the radio. We still have one more day in this week, obviously. But thus far, this is like the tightest range on a weekly candle for the SPYs. One of the tightest I can remember seeing. There was another really tight one back here, I guess, in December 24th, 2023. As I said that out loud, that was a holiday week. This is one of the tightest weekly candles we have seen in a long while for the market. Still one more day for that to change, but it's been a very boring week from an index perspective and not a boring week at all from an individual stock perspective. The last 4 trading days have primarily been corrective consolidation days with very, very small ranges. Yesterday was an inside day, which is impressive because the day before that had a super tight range. So we were able to, even with that, have an even tighter range yesterday. But the market fully corrected any extension that it had post the NVIDIA earnings over the course of the last 4 days of time and price correction. ADMA on the daily chart fully caught up, and we wanted to see, provided we had a decent PCE, if we could get continuation to the upside. And what I had mentioned, I think, in yesterday's afternoon meeting, is you never know what's going to happen with an economic number. A really hot PCE, they probably sell us off. A cool PCE, we probably get bought up. But I also felt, and you can never be very sure about this, that an inline PCE would actually make the market move higher. I think that there was a lot of nerves around this PCE coming off of the pretty hot CPI and PPI, that we could get another hot number here, and that might be the nail in the coffin on the Fed not cutting rates. And then the number was in line. It was pretty much perfectly in line. The market was able to rally decently off of that pretty much right away at 8:30. And then it was just a matter of, all right, now the market's opening up extended on the small time frame because the move was so big at 8:30. What will it look like after a half hour of digestion? And that's kind of what we called for. Let's be careful over the course of the first 30 minutes or so and then take it from there. And the first 30 minutes was honestly exactly what you want to see if you're bullish on the market. We spent the first 30 minutes of the day basically bull flagging and digesting the pre-market move higher that came from the PCE. There was still some extension from the price action on the 5-minute, even post 10 a.m., which usually is a struggle. You usually can't really maintain any real extension on a 5-minute chart without new news post 10 a.m. But the ADMA caught up to the low of the day, and it looked like it was inevitable that we could, capture the rest of this move. And then we actually sold down. We broke the intraday kind of flag pattern that we were trying to break. Then on the second bar here, we broke the low of the day in a pretty serious manner. And this candle here, this is what I describe as a penalty box candle for the market. It was not the end of the world because it was still at that point more of like a 15-minute chart time frame correction where we pulled into this equilibrium zone. So not necessarily the end of the world, but after a negative Maribozu like this, the market really needs to prove itself. So once we had this come in and we bounced back a little bit, I was still on the radio, but I had nothing to say. It was just a matter of, are we going to break to new lows, which I thought would be a real problem for the market and could potentially even indicate a failure off the PCE move? Or do we then break up a little bit, negate the 10 a.m. bar, and then the market starts looking really good again? So when we're mid-range here for this hour and a half, it was like, you know what, I think I need to go a little bit hands off right now and let the market prove itself in one direction or the other on whether or not we're failing or not. And then we actually did continue to fail down. Um, Once again, midday V bottom. This never used to be a thing the way it is now. Like it'd be like every once in a while you would get them, but it would be pretty rare. Usually you would get like a midday V bottom on a rarer circumstance where um, it could end up being like a bottoming pattern for a daily chart where you've had multiple days of selling, and then the market like gaps down on the final day of selling, and there's a lot of extension on the daily chart, but there's so many people that are out of the money, and you get like a full half day of panic selling basically, and then the panic selling ends, and then you get like a midday V bottom that turns the market around. We used to see that occasionally. Now you get these V bottoms seemingly like a couple times a week that happen right in the middle of the day. And we've spent a lot of time talking about this over the course of the last couple of years. I really think that this has to do with the zero DTE options that exist now that never existed in those previous years that I'm describing. So it's become kind of a normal thing. And even when we hit lows, I actually called out and I bought the IWM via the TNA just as a scalp type of trade. Execution on it was pretty good. Called it out to the VTF. Here's a chart here. This was my purchase. It was just a quick, scalp for the extension here. I didn't want to hold it for really any more than that. But I think I said at the time, I was like, I'm not fully sold that this market is actually going to fail, because it's like, yeah, we filled the gap. We're extended into a gap fill, so I think that we can at least get a bounce off this area here, and that was kind of my main reason for buying, extension into potential gap fill support. The market itself, though, doesn't fail until the SPYs and the Qs get below Thursday's low. So if you're trying to be a momentum trader on the market today, which I totally understand, and that was my initial thought process when I was doing the morning meeting, was looking for a continuation of IWM outperformance, a continuation of the short squeezes that we've been seeing coming into the growth stocks in a major way over the course of this past week on the backs of this inline PCE that's boosting the market and also giving the TLT a really big bounce. That was my main thought process coming into the day. That thought process was proved incorrect once we got the 10-10 break lower here, though. It didn't mean that the market was broken. Like I said, it's just a 15-minute correction. But anyone that was really looking for momentum continuation of the market and real short squeezes to continue in IWM outperformance, I think you wanted to see us continue off this bull flag here, and we weren't able to do that. That failed, but the daily chart didn't fail yet. So I use this as an opportunity to cover a bunch of the TQQQ that I still have short, though I did finish red in that name today, and I'm continuing to give back some profit in it. But also to buy some of the stocks that I'm in, and to take, just a quick cash flow trade in the IWM via the TNA there. I wasn't looking necessarily at that time, though hindsight's 2020, and when you think about it, we've had so many of these V bottoms. I wasn't necessarily expecting that we, after going red, filling the gap, doing what we did here, to actually close on new highs of the day. And this last candle was wacky too. It probably has something to do with the end of the month and the pension rebalances, everything we talked about, but big boost and then big sell back down all in this last kind of 5 minutes. But at the end of the day, this market still looks very healthy. There's no real extension. We were able to finally create this potential pivot low in the market in the SPYs and Qs, post PCE, off equilibrium, and the technicals of the market here look like they are set to continue higher. I know we've been struggling this entire week. I wonder if now we actually have the catalyst behind us to squeeze up a little bit further here, to be determined. But as long as we continue to hold above that 503 for the SPYs, that NVIDIA earnings day intraday low, there's absolutely no reason at all to be bearish on this market, which doesn't mean that you can't make a few bucks, shorting maybe the intraday breakdown in the market today off the open, though I think that's much harder trading than trying to be on the long side right now and being with the trend of the big picture. And it doesn't mean that you can't make a few bucks shorting some individual stocks out there that are relatively weak or trading on news or earnings or whatever. But the trend is your friend. This trend continues to be higher. We know that there's some yellow warning flags out there as far as positioning sentiment goes, as that continues to accelerate higher. Though actually, if you read Pat's note this morning, it noted that the long-only hedge funds and vol control funds actually have reduced a little bit of exposure over the course of the last week, which I thought was interesting, though there is still obviously a lot of long exposure out there overall for this market that we need to continue to monitor. But SPYs are looking great. Qs looking great also. Neither the SPYs nor the Qs were able to break, I think that was Tuesday's high. No, that was last Friday's high when we had this most recent high. So that's what we need to pay attention to on the upside. But again, we finally have our potential pivot low. We got through the PCE. Qs are looking great. And the IWM, a little bit of a disappointment with this Russell, I think, actually. My thought process, which proved to be wrong for today in the morning meeting and the game plan, was that the IWM outperformed immediately after PCE as TLT rose and interest rates went down. So I was like, this is perfect. This market is totally set up now, and the IWM is no extension either. And we know that the weekly chart looks fantastic as the ETF here and the index holds above $200. But I really thought that morning outperformance, that pre-market outperformance in the IWM was actually going to last throughout the day. And it wasn't great. You can see the huge gap in the IWM, much bigger than the SPYs and the Qs, but big fade. And when the market created its low of the day, that eventually led to new highs for the SPYs and new highs for the Qs, the IWM couldn't really participate. So this Russell's only up 0.5% at the end of the day when the Qs are up 0.9%. I don't remember what the percentage was that the IWM was at highs, but I think it was like 2%, right? So they faded this thing to flat into the gap fill pretty much here during the day, which is what I had initially bought. But even at the close, they faded it like 1.5% off highs. So not really what I wanted to see. I wanted to see continued rotation, but not the end of the world either. These markets overall are still looking really healthy, and it's just a matter of if they can continue higher or not. So yeah, so that's from an index perspective. As far as individual stocks go, AI was my trade of the day. Started pre-market, called it out into the VTF very early that I was going long versus $33. I was able to buy stock below 34. This is where I entered at about 8 a.m. or so here, somewhere in here. So I had a decent price on it. I was definitely paying up a little bit, but with an understanding that 33 was after hour supports. That's what I was planning on using as my broad stop loss. And I'm looking for the squeezes now. I think that we've hit that point of the market cycle, and this was another big lesson that I had personally in 2021, late 2020, early 2021, where in that environment, it was very clear and obvious to me as someone who had been trading for a long time that the market was in a bubble, and we're nowhere near anything what we were like in 2020 and 2021. And if you need reference on that, you can look at and I mean like late 2020 or early 2021. You can look at any of the growth stocks that are still off massive from where they were. I mean, or look at ARK or any of the stocks that Kathy is involved in with ARK. $160 ETF up here at highs in early 2021. And now even with a very nice rally, I mean, ARK is working towards being up 100%. I'm exaggerating my numbers a little bit. But 80% off lows and nowhere near that high. And that's kind of what most of those stocks are. So the difference in my thought process in this market environment as I'm looking at these short squeezes and short squeeze names and some of these growth stocks that we're seeing starting to go recently, like a Wayfair and a Carvana, is just the recognition that if the market wants to, and I don't think that we're setting up to see a repeat of early 2021, but if the market really wanted to, it could do that. If the market really wanted to, I mean, I don't know, where was Carvana back then? Carvana was a $377 stock at that point. And you could easily make the argument that it's ridiculous to see this thing back at 75 right now. But I will make the argument that if you think it's ridiculous at 75, you'll think it's ridiculous at 120 because it could go there. And the difference that I'm trying to have as an approach with that environment back then, I couldn't get myself to really participate long in these things that I just felt were absurd. And now I'm saying to myself, it might be absurd, but you know what? I don't care. I'm here to make money. If they want to squeeze these things, if the trade setup is there, I can be more involved in momentum style trades, and I typically am, just to see if we can get those continued squeezes. So that's been my thought process, right? That's how I was able to buy beyond through 9 on the way up yesterday, and then rebought like $9.15, a lot of stock. Sorry, it was 2 days ago after hours that I bought it, but rebought a bunch of stock in front of that $9 pre-market this morning. This also was a really good trade for me today. Was just beyond meat. But that's why normally I wouldn't, am I going to buy $9 and $8 stock? It's a dollar extended, and a $9 stock. It's massive. And now I'm like, yeah, I am, because they can rip this to $15. They can rip that Wayfair through 55 to 62 like we were looking for, even though I got shaken out of that position. That's why I got involved in this stupid FSR, because I was like, in any universe where this thing is decent, not as bad as expected, with the way that they're squeezing everything, I love the risk reward of being involved in this, because they could squeeze us back to $1.50. And that was pretty much my target, was $1.50 on this. I was like, I'm just gonna buy into this report. I'll buy versus zero. I don't care. I won't buy a massive position. But while they're squeezing everything, I'm not gonna be afraid to be involved in these. That's why I was trading that Ion Q after hours, which luckily I liquidated the position either while I was doing the afternoon meeting or shortly after the afternoon meeting for a profit, and didn't keep any overnight because this thing was a disaster later in the evening yesterday and then this morning. But yeah, I'm just trying not to be afraid to be involved in those names when they're going and when they're squeezing, and it's working out overall. But you definitely have to make sure that you manage your risk, because when they pull back, I mean, again, just look at this Ion Q. They can be really brutal on the downside. What else? I didn't really trade anything else that was kind of on my list. I'm not even sure what some of these did. Yeah, MNSTR, Monster here, looks like it was difficult. What did GDRX do? GDRX was nice. Nice long verse 7 there that we talked about. Wolf couldn't really give good continuation, I guess, by the close. What did IBM do? Could it go? No, they sold IBM back down also. But yeah, so some opportunities out there for sure, and there's been opportunities in this market on both sides over the course of this week in individual stocks. There's been really good movements in individual stocks, even as the market itself has done relatively nothing. So that's all I got. I'm happy to answer any questions anybody has. SEC sues Lordstown Motor for misleading investors. What was that symbol? Does that company still exist? That was Ride. Doesn't exist anymore. RIDE. Anyway, scrolling up here in the VTF. I think the first thing I'm seeing is from Rex. Ride Q OTC, so they're bankrupt. From Rex on AI. Today I traded AI at $9.40. Ooh, off that low? When it went back through 35, I assume on the way up there. Had my one-to-one kick and some more at the high. Then AI consolidated the whole day and broke out around 2 p.m. I was a little greedy on AI and was looking for $40. I love it. I love it. Turns out I hit out around 345-ish, so I didn't have enough profit to swing it. Okay. My question is when it broke, failed to back down the intraday 3750. Oh, here you mean when it broke up through 3750 and then came back down through it? Should I just hit out, as there's not enough room for me to swing and the day is almost over? What time is it there? You know, it's really hard to say. So first of all, let's actually review the trade a little bit because I like some stuff in here. I've mentioned, I think, in 2 afternoon meetings in a row that I really love the trade on these earnings names when they gap up really big and then price correct to the 80 MA for the first time, then give some sort of doji pivot off that. I think that's generally a pretty consistent trade. I don't remember. Someone asked me that question yesterday on a different name, and it didn't bounce well enough and then failed. But overall, I think that's a great trade. I like it, and that's pretty much what happened here. Now, this tail was massive to the point where I remember asking the VTF because I wasn't watching it at that point if it was even real, and you guys had told me that it was. So I was like, wow, and this is exactly what can happen in earnings names. They can move really, really fast. But by the time this bar closed, if you wanted to buy the bar after it closed at 36.20 versus that low, that's probably too much risk. I know it's a growth stock, and I know this thing could squeeze to $50 if it wants to, but I really don't like the risk reward of buying there. For you, it seems like you bought back through the opening low, knowing that this tail was forming. So you got like a head start on this hammer as it was forming, as it was tailing back up and buying it through the opening low. I really like that execution. I think that's really good execution. Then you got your risk covered, you booked a little bit more, you're in a win-win situation, and then once you were in your win-win situation, you went into full greed mode. And I love that. I think that's perfect game planning. That's exactly what you want to do. Again, because with these stocks, you just don't know. This thing definitely can work its way up to $50 if it wants to, and it could do it over the course of 1 to 3 trading sessions with the way that they're squeezing names up right now. So love every aspect of your trade, your game plan, and it's all a fantastic job. Now the specific part of the question was you had this kind of intraday breakout through like 37.50 here, and then it broke down below. And you know that if it closes below 37.50, you're telling me you're probably not going to have a good enough of a profit cushion to swing it, and you'll have to close out the position. So should you just wait for the close, or should you just get out through 37.50 on the way down, because that's when it looks like this intraday breakout is failing? It's a good question. I don't have like a answer that I'm excited about for that, and I wouldn't hate really any way that you approached it. If you just at that point are liquidating it through 37.50 on the way down, I wouldn't hate it. I can tell you for myself what I would do is I would hold it to the close, just because you never know that last 30 minutes, especially the last 10 minutes when the order imbalances are hitting, you never know what type of squeeze in either direction, higher or lower, that you might get in the last 30 minutes, especially the last 10 minutes with the order imbalance hitting. So if your game plan at that point with your remaining stock is to be really greedy because you want to go for it and you want to make money with it, then I would do that. I would go for it. And I would say, you know what? I'm just going to hold this to the close, and if it closes below 37.50, I don't have a big enough of a profit cushion, I'm going to hit out of it. And if it gives me the squeeze in the last 10 minutes or whatever, and closes it 38 or whatever, then I'll swing it. That's what I would do personally, but I don't think that there is necessarily a right or wrong answer on how you want to protect your P&L in this situation. Because I totally understand, hey, my intraday breakout is failing. I'm not going to have enough of a profit cushion. Maybe I should just hit out instead of giving it all the way back down to my stop loss in case the opposite happens. Because now it just failed on this intraday breakout. Large sell imbalance hits. Next thing I know, I just gave this thing from 38.50 at that high to $36 at the close and gave back a lot of that profit. But I think that what you're telling me from the beginning is I'm comfortable giving back that profit. I want to be greedy with a smaller percentage of my position, in which case then I probably would go for it and hold it to the close and see what it can do. So thank you for the question there, Rex. What are you showing me here, Vikas? This AMD chart? AMD up another $2 after hours. So, this was also one of the trades of the day. I didn't have it written down on my list, but we look at these same handful of stocks every morning. And we were like, oh yeah, AMD, the 180 level. The 180 level is really important. You could be long through 180. And it sounded like a few of you guys really caught this trade, which is awesome. I love it. This is a pure off the open momentum trade through that 180, but you could have literally gotten in this thing for 23 cents worth of risk. So, and it sounds like a bunch of you did that. I don't know for you out there, and I know there's a bunch of you that bought it, but I don't know for the people who did if you were just giving it to that opening low or if you were giving it more room based on the extension from the gap. I know that if it was my trade, we've talked about these situations in the past, that I can't with Dimitri right now. I know we've talked about these situations in the past where I usually do like a two different stop loss thing, where I might take extra stock that I'm keeping real tight versus that opening low, and other stock that I'm giving a lot more room on. Dr. Pepper. Jab is said to seek up to $2.5 billion in Keurig Dr. Pepper share sale. Interesting. Yep. Thanks. Dimitri, what are you doing with these photos? Oh man. Amazon giving some continue. Oh, what happened? Wow, look at this Amazon in the close. Yeah, sick. Really sick. But yeah, that's the power of these order imbalances sometimes, and especially end of the month flows. This is what I was talking about. Like, you could have gotten that in AI into the close. So if you just hit out through 37.50 and then you got the right order imbalance that comes in, could have done what Amazon did. Could have done the opposite of what Amazon did also, though, and sell back down. But I think it just goes back to where you are in your stage of your game plan, and you were in the greed mode, and then it makes sense. From David B. This morning in the pre-market, I bought TNA right before the PCE print because I had a bid near yesterday's low. A little scary to do that. Taking a bit of a gamble there. I normally don't trade before prints, but it was small, okay, and thought my risk was going to be 30 to 60 cents, though it could be more. While I know you don't normally recommend trading before an economic print, do you think it's okay with the other technical reason? Honestly, I feel like you purely gambled on it. I feel like it's a pure gamble, and you got to be careful. These things can move so fast on those numbers sometimes. I'm just trying to think what the up move was because it easily could have been the exact same thing to the downside. So this thing went up $1.40 in 5 minutes. So you just got to remember that this thing could move down $1.40 or more in that same 5 minutes. So if you think that you're trying to get out for 30 to 60 cents risk, it's possible, but you better be like, and I hate trading this way. I used to trade this way a decent amount. You need to be like staring at your level 2, not blinking, and it's pre-market too, so you can't have a stop loss, you can't use a market order. You need to have, if you're long, an offer crossed down like $2, and you're like staring at that level 2, staring at that tape, not blinking, eyes bleeding, and the second you see that thing start to trade lower by your 30 to 60 cents, that you are pressing that enter button as fast as you can to cross the market to be able to hit out, because you could lose a lot really fast. Now, the thing I like about what you're telling me is that you did it very small, and I do that. I'll do things very small in front of numbers or whatever, and I know I can manage the position if it's small enough, even if it's moving rapidly against me, because the size is so small and so appropriate. So I think that makes it okay. But I do think that, when you're coming in, what do we say about economic numbers? So I would say two things about economic numbers. One is that the market movements, I do think, tend to happen in the direction of the technicals. But the other thing that we say about these types of economic numbers all the time is that if there's anything that can rapidly change the technical picture of a market or a stock, it is a earnings event or a major economic number like this hotly anticipated PCE. So, yeah, you can look at the TNA, you can look at the IWM and be like, yeah, this thing looks great technically and I want to be long. But if there's ever a time when all of a sudden the market picture can flip and the technicals can flip and this beautiful bull trend that we've been in immediately is broken and is failing, it's going to be off of a major economic number that surprises the market and gives you that move to the downside. So, and because of that, you are inherently taking a bit of a gamble there. And again, small enough size, I don't necessarily mind it, to be honest. But you just got to be prepared to either be able to manage that position if it's moving against you, or like I was saying, if you're buying that thing and trying to give it 30, 60 cents risk into a print, you need to be like having your order teed up, ready to go, and just staring at that level 2, staring at that tape, immediately ready to execute with like your eyes going dry, bleeding as you're looking at them. I used to trade that way. I don't like trading that way. It's a little too much. But to each their own on their trading approach to some degree. No problem. Popping over to the YouTube channel, I got Robert with some questions in here. I'm trying to implement the cash flow trades into my trading. Based on what or how do you decide what dollar amount you'll be buying and selling your positions? Every 20, 30, 50, 70 cents. Also, do you only take the buy low and sell high those trades, or would you also be doing buy high and sell high? I traded AMD today, but there was a lack of pullbacks. It seems like it was hard to implement this strategy. If you could quickly go through the AMD chart and how you would be implementing your cash flow strategy, I would appreciate it. Thanks. Sure. So basically what Robert's asking about, I've spent time in the past talking about it in afternoon meetings, is one of the game planning strategies that I like to implement on trades for reward maximization. And we've had afternoon meetings where we've probably spoken about this for like an hour straight, and I'm not going to get into that degree of detail today unless people have a lot of questions and they really want me to. But when we're talking about like reward maximization in trading and game planning for reward maximization, there's a lot that you can do, right? So one of the best things that you can do is have a trailing stop system for with trend trades for continuation. But another thing that you can do that we've talked about is, especially with like after your risk is already covered and everything else and the stock is moving higher, you can you can sell into big extension with the idea of looking to be able to buy that stock back in the equilibrium area, maybe even just at the 80 MA, and just keeping the difference as kind of cash flow. And you can do that technically based off of extension and reversion to mean after extension. Or another way that you can do it is, and then you can potentially combine some of these strategies, is that you can just do it incrementally. I've got 5,000 shares of my stock, and I am going to sell 100 shares every 10 cents over the course of the next $5, and I am also going to rebuy that on the way down every 10 cents, and then I can make money. And this is a lot of what I do. I love these strategies. They're very active strategies. They're great cash flow strategies. But every 10 cents on the way up I sell, every 10 cents on the way down I buy, and I just keep the difference, and I'm able to do it over and over and over and over again. And that could be a 10-cent increment, a 25-cent increment, a dollar increment. So the first part of the question is, how do I choose if I'm implementing that type of strategy and I'm doing it entirely quantitatively, based on like more risk reward, or just based on those increments and not doing the extension retracement strategy of it. If I'm just doing it incrementally every 25 cents or 50 cents or dollar, how do I choose the increments that I'm doing? And the answer is definitely a little bit more art than science. Has to do primarily with how much stock I have, where I think it can actually go based on the daily chart, and the overall price of the stock. So if you are doing this strategy in a $10 stock versus you're doing it in a $180 stock like AMD, then that alone will inherently mean that you're probably going to have tighter and wider increments. And most likely, though not necessarily, but most likely in your $10 stock, you would have a significantly more share size than you would in your $180 stock. So maybe in a $180 stock, it makes sense to do it every dollar, every 50 cents, every dollar. But in a $10 stock, it makes much more sense to do it every 10 cents. It also definitely depends on size, how much size that you have. Like if you look at, I don't know, look at your AMD daily chart, and you think it's possible for this thing to go to $225 over time, and you want to implement this strategy, but you only have 500 shares, and you're starting it at 180, well, guess what? You're out of stock by 185. So that's not a good game plan. So you would want to widen those increments to enough where you could capture your move to that 225. The problem is that if you widen your increments too much, so now in this case, I don't know, let's say you only had that 500 shares and you're looking for a move to 225, what's that, $45? So you would basically, it's a little, just rounding up, you basically would sell 100 shares every $10 and then look to rebuy it down every $10. Well, that's not going to work either. That increment's just way too wide. So it's a balance based on the amount of stock that you have, where you think the thing can actually go, and what type of fluctuations you can get in the mean, while it's doing that. And the fact is, if you think that the thing can go to 225, you don't want to be really doing that strategy if you think you can do it in a short period of time, because then you're just going to be selling stock early. And you'll never get to rebuy it. You're never going to create the difference because it's going to keep moving higher and higher and higher, and you'll just be giving up on profit. And in that case, you're almost better off not doing this at all and just entirely doing more of a trailing strategy. So you really, I would say one thing, in order to be able to implement this type of strategy that you're talking about. And this is why I don't spend a ton of time talking about this all the time in afternoon meetings, even though this is something I do myself. You have to be able to have a lot of stock in order to make it worth it. I was using an example of 500 shares in AMD, which, it's a $180 stock. It's a lot. But it probably would make more sense if you had 5,000 shares of AMD. Then, but are you big enough of a trader, and can you afford to actually have 5,000 shares of AMD? If the answer is no, we already just discussed that this doesn't make any sense probably if you're doing it on 500 shares. If you have 5,000 shares, it makes sense, but maybe you're not big enough of a trader to be able to do that. And if you have 5,000 shares and you sell 100 shares at $188 or whatever, because you're selling 100 shares every dollar on the way up, then if you don't get that 100 shares back and you miss the move to 220 or whatever, losing 100 shares as a percentage of your overall position at that point can be okay. And really what it is, it's a balance of, and we never can actually know this answer. Is it possible for me, like, let's say that the target you had, I don't know, I'm just coming up with some examples on the fly. Let's say that you bought 180 this morning and the target is 190. How long will it take to get to 190 is one question. And what will the fluctuations look like when it gets there, right? Because every 100 shares that you have that you can make $10 on is going to be $1,000. But if the stock goes sideways, let's say, between $180 and $190 before eventually getting to your target for a week, you could easily get 10 $1 fluctuations within that. And if you were able to sell 186 and buy 185 and do it 10 times, and then you sell 186 and then it continues to 190, you actually end up making more by doing that than if you held that entire extra stock to 190. You'll make more by doing those fluctuations. So what you're trying to figure out is, like, if you're deciding to implement that strategy, is not just what your target is, how much size you have, what the spacing should be, but what it'll probably look like for when as the stock actually gets there, right? Because if you're looking at a straight vertical move, and there's obviously no way to know this perfectly ahead of time, but if you're looking at a straight vertical move like AMD today, you probably would have been better off just, holding and trailing your position primarily, because you're not getting the fluctuations. It's more or less straight up. But if it's going to be something that you're swing trading and that you're going to be in for weeks or even potentially months, and you've got a very large target on it, you could potentially just be doing this and doing this and doing this day after day after day, and just creating a ton of cash flow for yourself. I think of SoFi, which is a name that I do this a lot in, or Snap, which is a name that I do this a lot in. You could just be making cash flow for yourself over the course of weeks or months, while the trade eventually does one of two things. It eventually plays out and gets to what your target is, in which case, great, you made a lot of money along the way throughout the course of months of those fluctuations and made money because it reached your target. Or it fails. And it fails, but it fails after a month of you being able to implement this type of strategy where you pocketed a whole lot of cash flow in the meantime, and then you're getting stopped out of the position, and but you made so much cash flow in the meantime that you're still up a lot in it. Or something that I've been doing more of, which I've also talked about, is actually taking that P&L that I make from the cash flow and saying to myself, on this trade, I'm willing to be, at the end of the day, if it fails, I want to be at zero in it no matter what. And instead of just actually locking in the cash flow, I've been taking the cash flow and loosening the stop. And that way I'm giving myself more and more room, which then gives me more and more time to be able to continue to implement this strategy and enable it to work. And if you did it well enough, I know we've talked about this, I think specifically with Snap, because this is a name that's been stuck in this range for so long, and I've been doing this in this stock since 2022, and it's just been paying me constantly every single day for like 2 years now or whatever that I've been doing this. It is in theory possible that you could have a cost basis by doing that on your trade that eventually is lower than zero, which means that even if the company goes bankrupt, that you would make money in it on the downside, and then obviously if it ever just goes up to your target and you ran out of your stock because it was at your target, that's a good problem to have also. Thanks, Robert. No problem. From Bill, question on your 10-cent systematic strategy. How does it actually officially start? There's a few ways in which I sometimes do it. Do you start buying your increments, or are you taking a large chunk and then doing increments? I do both those things. And side note, you could probably make it life a lot easier in DOS with the hotkey scripting and trigger order stuff. Knowing you're not going to switch platforms, but might be worth poking around. I don't hotkey scripting and trigger order stuff. Does that basically mean like if I got filled on a bid, it would auto offer for me at a certain point or something like that you could kind of script into it? Yeah, it's interesting. Another thing that I could do also, which I've had in the back of my mind, auto put a stop. That I've had in the back of my mind is, you could just easily just have an algorithm just do the entire thing for you and do it for you. I don't have any coding experience. I don't feel like hiring anyone to do that, and I'm in front of the computer all day every day anyway, so I don't mind. That's what you always think when you hear me banging the keys, especially in the morning. Yeah. It's in my head, and it's probably going to happen eventually. But I'm in no rush. I'm in no rush to pay anybody to do it. But we'll see what happens eventually over time. And there's definitely still aspects of it that are better off doing manually, where I can have little discretion on certain things, especially if I'm holding into like an earnings report. That's where I really like to have discretion on kind of how I do it, because then I might be buying or selling wider chunks than I would otherwise. Um, but going back to your question, how do I officially start? It depends. It honestly depends. Sometimes, like with this Beyond yesterday, or 2 days ago, or certain stocks, it basically starts with me just taking a whole chunk of stock all at once and layering offers all the way up, and then layering bids all the way down until where I would stop myself out. In other circumstances, sometimes when you hear me saying, "Hey, I'm taking a feeler in this position," that means that I am not taking a larger chunk right away. I'm just starting almost at zero and going to be willing to build in against me at those increments. Usually, what I'm looking to do there, though, is find a spot where I can technically take a larger core and actually be able to size up. But I want to start doing some kind of immediately as more of like a feeler, where I might even have as small as 100 shares that I'll hold up in my favor, but then I'm willing to build in on the way down until I see something that I don't like, and then in which case I'm getting out, or I see something that I do like, in which case I'm sizing up. But like I don't know. It's always better. I think all of trading is always better when you have time to really think out exactly the game plan that you want to implement, but exactly how much money you want to put towards it. That's why I prefer, for me, like the best trading that I always do is usually trading that is based on the pre-market research that I've actually done, because I have time to really think about it. But just using the Beyond Meat as an example, because it's one where I took a whole chunk of stock all at once after hours yesterday, but then decided to implement this strategy. I didn't really have the time, because it was so fast and the execution needed to be so fast, to really think about how much do I really want to buy in order to give it how much room. So I think I bought like 2,400 shares through $9 day before yesterday after hours. I think I'd have to double check exactly what the number was. And then doing that at 10-cent increments, which is what I was doing, then that gives you a move to like, must have been a little bit more. Because basically the way my game plan worked out was I had stock to like 1160, starting from 9 on the way up as a chunk. So that would mean that I bought 2,600 shares, basically. And that was more, again, because it was more reactionary and not having the time to think about it. It wasn't me really like looking at the chart and thinking about the short flow and thinking about like, what's a reasonable target, 11, 15, 12, whatever. It's kind of just like, oh, it's going. I know it can short squeeze. I can get a price of $9. I can give that risk down to $8, and then I can see what it can just do. So it was just like, oh, here it is. Boom, I'm buying, 2,000. I think I bought 2,000 shares in one clip, and then I bought like 200 shares at a time with a few additional buys that got me to like 2,600 with like an average price of about $9 after hours, and I just layered out those offers all the way up to 1160, and then I bid all the way down to 8, which is where I was going to stop myself out, and then doing the risk on that. I have a spreadsheet that can just kind of tell me this really quick. So if I'm doing that at 10-cent increments and it's $1 down, I'm going to be taking on $550 worth of risk on the additional buys on the way down, plus $1 worth of risk on the $2,600 core, which is 2,600 on the 2,600 share core, which is $2,600. So therefore, I'm risking $3,100 or something like that in the trade. Is kind of how the math works. And then let's see what it can do. Maybe the trade works as perfectly as it did and it goes all the way up to 11.60. Maybe it bounces up real fast to $9.50 and then it's coming down and it's eventually failing on me, but I'm able to, every single time I can get that 10-cent move. If the initial risk that I was putting on is $3,100 or whatever I said, every single time there's a 10-cent fluctuation over the course of the trade failing means that my risk is dropping by $10 basically. 10 cents per 100 for each 100 shares is $10, right? So every 10-cent fluctuation I can get to that point. Eventually, if I can get 310 10-cent moves, then break even down to a stop loss of $8 on the trade is how I see that. And when a name is moving that rapidly on earnings, I think even in a failed trade scenario, I can get a lot of buying and selling done that kind of negates a lot of that initial risk by the time the trade fails. Of course, there's going to be a circumstance where it just goes straight down and I lose the entire risk, and I'm prepared to do that. There's also going to be circumstances where it actually goes straight up, which actually is not always ideal. Because like I was saying to Robert's question, I would have made more if I just held the whole position or trailed the whole position. But a lot of times, especially on an earnings name, there's so many fluctuations in stock like this, especially, that can just continue to pay you. And then if it becomes a swing trade, then gaps can become really beneficial also, because I held some overnight, but I didn't buy this last bit into the close yesterday. So all the stock that I would have bought starting at like $10.20, I bought all that all at once. So if it's 10-cent increments at $9.15 this morning, down here, pretty much at that low, which is probably a little bit lucky. But I thought that $9 actually would be important and would hold. So then, I'm basically buying like 1,000 shares or whatever. I think it was actually more than that, all at once at $9.15 instead of actually buying it the whole way down. I'm getting an extra premium on the way up for when the thing goes. And again, I am implementing a little bit of discretion with it. Actually, no. Yeah, here is where I bought all that stock. And then I was able to sell some, then I rebought it, and then it's just the same thing. Selling on the way up, rebuying, selling on the way up, rebuying, selling on the way up, rebuying it. And now, with the stock closing today at like $9.50 or whatever, I'm actually up significantly more P&L now with a $10.50 close than I was after hours that first day, when it just went straight up to 11.60 and I sold all my stock or whatever it was after hours. Because sure, I got that move, which was great, but then I continued to do this all day yesterday. Then I bought the gap down this morning and continued to do this all day today. And now, if this thing fails and goes to $8 and stop me out, I'll make money in it for sure. And if it wants to just keep doing this, I'll just keep making more and more and more. And then I've got optionality, right? I can stop myself out at 8. I can take the extra money that I make and I can lower my stop further to give myself more room to continue to trade it if it goes down. If it goes up and I run out of stock, but I think it looks good and continue higher, I could take the money that I've made and continue the same strategy, but restarting at a higher price with the same stop loss and still potentially also be at a zero. So I've got that game planning optionality that I can implement with it as well. And then again, the more time that goes by that I'm able to kind of be in the name, the more optionality I get, the more distancing on the upside and downside I get, where I can continue to kind of do this and implement it. And again, going back to like the Snap example of do this for a couple of years and do this for a couple of years without running out of stock or without getting stopped out. And next thing you know, you can afford to hold a stock 50% against you, like for a 50% down move against you, before you're even break even on the name. So yeah, hope that helps. From Jim, I struggle when entering a position with a lot of inventory as more used to pyramiding positions when I was trading my retail account. I'm not 100% sure what that means. Hate large drawdowns in the event that the stock trades against me. Me too. Me too. I say it all the time. I know you're still relatively new to the team, and we've enjoyed having you on the team, by the way. But I say it all the time. I will risk sometimes tremendous amounts of open P&L when I'm in the money on things, but new risk, having stock trade against me and just taking drawdowns from it, I hate that. I do everything I can to minimize that. But it's inherently part of the business. You have to do it in order to be able to trade. But I'm always trying to mitigate that. That's why I like those one-to-one kicks. I like getting the risk covered as early as I can. And I love the idea of failed trades costing me zero and me being in win-win situations. It's always a consistent goal that I have for my trading, is to every trade that I'm in, how can I get myself in a situation where I have only upside for the most part on my trade. Anyway, continuing with your question. That being said, with a lot more buying power on a prop account, do you base your per trade risk on equity account or on daily buying power on equity account? Definitely on equity account. Still getting used to so much buying power intraday, trying to maximize my edge while keeping the downside relatively tight. Yeah, for sure. So I think that prop accounts for professional traders can be a phenomenal way to juice return. Prop accounts with the leverage that we're able to provide to traders can be a phenomenal way to also lose significant amounts of money in relatively short periods of time. The key is obviously how you use it. You know, if you're able to consistently keep the downside tight, but utilize that buying power, that extra leverage that you're able to get to provide reward that you can't get otherwise, that's the goal. So for me, one thing that I'm never concerned about pretty much ever, I would say very, very rarely, is like how much a stock is going to cost. Like one thing, whatever, going back to this Beyond Meat example, and this was not a buying power intensive stock by any means, but I'll just use it as an example. It's a cheap one, does not require a lot of buying power, but just using it as an example, when I'm like buying that Beyond Meat at $9, like I was just describing, one thing that I'm never doing is saying, well, how many dollars am I spending? If I just, bought 3,000 shares at $9.05, how much of my account am I actually utilizing for that? The buying power that you can get on a prop trading account means that you pretty much never have to do that math. You're just using that buying power as you need to. So the math always is the risk math. If I'm utilizing all this extra leverage, I'm utilizing all this extra buying power, and this position goes against me, where am I getting out? How much am I losing? And how much of that am I losing as a percentage of my equity risk capital that I have, not as my buying power? Most of the time, you probably should not be utilizing a full 20x of buying power on an intraday basis and 8x every night overnight. Eventually, probably something will catch up to you, whether it's a gap down overnight or whatever. Most of the time, you probably don't need to be utilizing all of it, but you have it for when you actually need it. And that's the key. It's knowing when to actually use it, knowing when you need that buying power. Instead of trading beyond, here's a much better example actually. AMD through 180. If you bought versus this opening bar low, which is a very reasonable way to do it, 23 cents worth of risk. That's $230 per 1,000 shares, right? It's not very much at all. But every 1,000 shares is $180,000 of stock that you're actually buying, right? But I don't care. I'm not thinking about that ever. It's going to be pretty rare that I'm going to push up against that buying power number that I have, that 20x. But honestly, this might be a circumstance where it's worth it, because I don't know. Let's say that you got $1 million in buying power, right? And you want to, what did I say that was? 28 cents worth of risk. Now I'm using a calculator on my other screen here. 28 It's 5,000. Let's say you want to risk $1,400 on this trade, right? 28 cents worth of risk. You buy in 5,000 shares. You have $1 million in buying power because you have $50,000 account, which is not that huge. Just using those numbers. The point is that you're not ever concerned about the buying about how much it actually costs to buy. You're always concerned about the risk and how much of it is available to you versus your account size. Now that I think about it, if you only had a $50,000 account, using my example, and you're risking $1,400 on it, that's a pretty large percentage. Might be a little bit too much for this trade, but whatever. I'm just trying to get a point across, not necessarily analyze perfectly how much you should buy and how much spacing that you should give it. You have all this buying power afforded to you so that you have the capacity, if you wanted to be able to buy 5,000 shares of stock for 28 cents worth of risk or whatever I just said. You could never do that in a retail account. So you have this limited downside of the example that I'm talking about of losing $1,400. But what if you have 5,000 shares of stock for this move? That's the type of risk reward situation that a prop account can afford an equity trader specifically that you cannot get in a retail account. And that's exactly how you want to utilize it. Or even in the case of what I was just talking about with Bill and Robert about this kind of cash flow strategy that I implement. I'm not sure that can be done properly in like a Reg T margin retail account where you have 4x intraday and a ton of haircuts and 2x overnight. The prop account enables you to potentially get a reward for your risk that you can't get otherwise, but it makes risk management is the most important part of this game, whether you're in a cash account or a prop account or anything in between. But it makes it even like so much more important in this type of an account. I really think that for a professional prop trader, 80% of your mental energy that you're putting into this business needs to be on risk management. Knowing how much you're losing and where you're getting out when you're wrong. And also, the first step of reward maximization isn't reward maximization, it's still risk management. It's selling enough of the position to make sure that you can get your risk covered in one form or another. The simple way that I teach that, like in my training program classes, is through a one-to-one kick on 50% of your position. But in reality, as you advance a little bit further as a trader, there becomes a lot more optionality on how you can think about the first part of booking profit as risk management. You can get as simple as selling 50% at one-to-one to as complex as what I was just talking about with, getting 310 fills at 10 cent 100 share increments to cover the $3,100 worth of risk. So I hope that helps. No problem, Bill. Regarding pyramid, I formally would start with a small position, then add as the trade went in my favor with the intent to swing. Yeah, so that's it. It's interesting. That's a strategy that I definitely know people do, is that they add in their favor as trades are going in their favor. That's actually always been one of the few things that I very rarely have done with my own trading. Was like if I'm long, add up as it's working. I don't want to say never. Honestly, one of the best trades that I ever had, I did that. One of the best trades that I ever had was post-COVID in the junior gold miner ETF, JNUG. Does JNUG even exist anymore? Yeah, it does. I hate this ETF. It's funny. This has always been like my least favorite product, and then I had like one of the best trades of my career in it. where I caught this move, and it's split adjusted at they did a 10-for-1 split, so this was like a $3 stock, $3 ETF after this COVID crash, and it ran split adjusted from this $33 to this $190 or so split adjusted. Um, this is actually, and it's funny because I almost never trade this way. But yet this was like one of the best trades I've ever had in my entire career. I got very, very, very heavy in this thing at like $3.80 or something like that, like somewhat near lows. But then when it finally broke up and trended higher, I did a lot of like adding on the way up on pivot on pullbacks into moving averages on multiple time frames that helped me add a lot of P&L to this thing on the way up. I caught this trend and I probably like ended up I didn't get out at the very top, but I feel like I liquidated at like 150 or 160 bucks on the way up, and it was definitely my best trade of that year, and it worked really really well. Um, but yeah, it's not something I've ever done is the adding up. I don't know. Uh, Trying to wrap my head around some thoughts on it. I'll add up if I have a small feeler, I guess. If I'm starting with the feeler position like I talk about, and the goal is to find a spot where I can get heavier and get real size, then I'll do it. But once I have my real position, then I don't really ever add up. Or if I do it as a totally separate trade from the stock I already have, where it might as well be a completely different symbol than what I have. Um, I'm more am trying to find as best as I can that kind of perfect execution spot to really get size and then be able to have the stop loss in place now because of the size that I have, and then implement a game plan from that point where I'm slowly sizing down or just fully trailing at a certain point on the way up. So I hope that helps, Jim. Appreciate the question. From David L. Coming from retail to prop, I never want to go back. Once you go prop, you can't stop. Well, you are a poet and you don't know it. Uh, More like learn, survive, manage risk, and don't flop because retail just doesn't compare. We should get you a rap video. Um, over on YouTube here, Mr. Trees. Haven't seen you in a while. Hope you're doing well. I had a family member ask me, so you want to be a trader, but what did traders contribute to society? Um, and I didn't know what to say. So what would you say to them? Oh man, that's a tough one. Uh, that's a really tough one, and at certain points in my career, I've asked myself that as well. What am I really contributing to society by doing this? And honestly, I'm sorry. You can try to like say that you are helping companies to be able to raise capital and that benefits society, or that you're providing extra liquidity to the market and that benefits markets as a whole, which therefore benefits society. There's a lot of BS in that answer. There's a lot of real BS in that answer. Um, I think it more has to do with I am in some ways honestly choosing to be a little bit selfish because I genuinely enjoy this. I genuinely enjoy trading. I enjoy the math behind it. I enjoy the puzzle behind it. I enjoy um, I enjoy the um, study of economics and everything else that we do. But so there's a degree of selfishness to it, especially probably initially. But I don't think that's necessarily true as an end goal. And I'm seeing the commentary that Brian and Dimitri are making, and that's what's very true, is that you can utilize this to acquire wealth to, and I'm basically directly reading what Dimitri said, you can utilize this to acquire wealth to do good outside of trading. And you will probably find that some of the most successful traders in history um, are not only very wealthy people, but you'll probably find that they have been some of the biggest donors to some really important causes that exists. You know, I don't know one guy that just always comes to mind, but there's been tons of them. I mean, even just look at Warren Buffett. You know, philanthropy. Um, he's part of the, I think the thing where you, when you die, you give 99% of your wealth away. I think, along with other people like Zuckerberg, who obviously wasn't a trader or anything like that. But that's a very significant amount of money that's going to go to help people. So you know, that's the real goal, is what it can enable you to do. I think with your life, with you, for yourself personally, for you and your family, but also for the way that you can choose to eventually give back. Um, Bill K says that Chat GPT says finance traders play a vital role in the functioning of financial markets and the broader economy, contributing to stability, efficiency, and growth. And there is truth to that. There is truth to that. I don't necessarily think that. I don't necessarily think that my personal trading, that if I wasn't here trading personally, that the whole market would be very different because of it. But honestly, maybe all of us collectively, and I think I contribute some degree to everybody else. Maybe we do. So yeah, philanthropy. Um, David L. saying that $1 billion investor that just paid the tuition for all his medical students in New York City had enormous shares of Berkshire Hathaway. Yeah, so I mean that's just a further dividend, I guess, that Warren Buffett was able to provide. So that's a great way to end it. Appreciate the question. Um, yeah, look at everything Druckenmiller has done. All right. Have a wonderful night, everybody. Great day today. See you all tomorrow.